Yo, hello. Um, we're gonna be talking about market structure today. So you know market structure, right? So we're gonna go deep. We go deep. We go deep, way deep. So let's see how we understand market structure. So come through. Now, uh, when we talk of market structure, we are basically talking of the structure of the market, kind of like the way of the market, right? So, in understanding market structures, we have three phases of market structure. All right, because the market is always in three phases. Every time we try to look at the charts, the market will always stay in three phases. So one of the phase now where the market always stay in is the uptrend. All right, and we have the downtrend. We have the range markets. So now the market is always in one of these three phases. Always, always, always. Every time the market is always in one of these three phases. So you get what I want to tell you right now. We will focus on this uptrend first. Then we'll talk about the downtrend. Then we'll come talk about range markets. So right now, we understand these concepts. So an uptrend is something that looks like this. Okay, so now uptrend they call this kind of market. Uptrend, this is always the uptrend market. Why? Because there's a concept of this market making highs and lows. Then we go further. Higher highs okay, then lower lows. So we must understand something here right now. The markets talking about the uptrend in the market will always have highs and lows. All right. And going further, we go get higher highs. Okay. Then higher lows. Sorry. That's an error. Higher lows, higher lows, higher lows, higher lows, higher lows, higher lows. Okay. So the market was always there for the uptrend. All right. We're always going to have higher highs, higher lows. Focus with me. So right now, what do you understand by this concept of higher highs and higher lows? So now we have a representation here. When the market made a high, we call this high. All right. We call this higher low. We call this higher high. Don't forget the concept. Okay, higher high. Then this low here is called the higher low. This concept here. Higher high, higher low. Higher high, higher low. So anytime we see an uptrend, all right, an uptrend is one that has the concept of higher highs and higher lows. In an uptrend market, when the market is moving up, or in a bullish market, or when the markets they go up, you understand? We go always see say the market go they make higher highs, higher lows. You feel me? Higher highs, higher lows. Every time. So for an uptrend, we always have higher highs, higher lows. Every time. So I want that to stick in your mind when we talk about the uptrend markets. Okay, the uptrend. The concept of the market structure and an uptrend is always price making higher highs, higher lows for the uptrend. Now, can we talk about the downtrend? So now, for this downtrend, for the downtrend, we're always going to have lower highs, lower highs, and lower lows, lower lows, represented as LL. So lower highs, lower lows. Anytime we talk about the downtrend, we're always going to have lower highs, lower lows. The downtrend. For downtrend, we will get lower highs, lower lows. So now let's understand the representation of this concept. So for a downtrend, you have something like this. Okay, so this is like a high. This is a lower high. This is a lower low. This is a lower high, lower low. Lower high, lower low. Lower high, lower low. So for a downtrend, the constant of a downtrend, the constant observation of a downtrend is one that has lower highs and lower lows. So anytime when we see downtrend, we go to expect say we go to see lower highs. The market could make lower highs and lower lows. Lower highs, lower lows. Consistency of lower highs and lower lows every time in markets. So that's what we're going to see. We're going to see lower highs and lower lows every time, every time, every time. So now, if we can go further, we're going to talk about the range markets. So we will talk about range markets now. As a concept of market structure. So the range markets, you fit still call them, you could still call it sideways market. You can still say the market is sideways or range. They are both the same thing. Okay, so for the range market, you're seeing something like this. So the ideology of this is that price is just almost in an area. Price got here, rejected, got here, rejected, got here, rejected, got here, rejected, got here, rejected. So we can call this equal highs. But most times in a real market condition, you understand, they're always not going to be equal, but you understand the concept, they're just going to be around the same area. Do you understand? And we have equal lows. So the concept of this is that the ideology is that in a real market condition, they are definitely not just going to align together like this on a straight line. But the idea is that it is rather not making higher highs, nor is it making lower lows, lower highs and lower lows. It's not making higher highs and higher lows, neither is it making lower highs and lower lows. Do you understand? So the concept of the range market is, or the sideways market is equal highs, equal lows, or just market moving static in a single line, something like that. You feel me? So right now, in this market condition, we're still going to elaborate on this when you get, because even in your range markets, we can still find structures, but I'm going to go to that in probably another video. So right now, we just want to understand the concept of the uptrend market, the downtrend market, and the range market. So now let's move further to the uptrend market. So for the uptrend, all right, for the uptrend, we said price should consistently make higher highs, higher lows. All right, so this concept is very, very important when talking about the uptrend. So we are always going to expect to see higher highs and higher lows. So I'm going to give an illustration, an example to elaborate this. So in the market condition of your market structure, which is called the uptrend, price moves like this, makes a high, makes a high, makes a low, makes a lower high, makes a lower low, makes a higher high. I'm trying to give you a real life explanation with the live market charts, like how it's going to look like in the real market. Because I see most educators or most mentors, they just show you, they just tell you, okay, the uptrend is they give a perfect graphical representation of, and this is what it looks like in the real market condition. But this is what you have, right? You have something like this. So the market does something like this. So right now, what we can spot is this high, this low, higher high, higher low, higher high, higher low, then higher high, higher low, higher high, higher lows. This is the concept of the uptrend. Now, when you want to talk about understanding how to take entries in an uptrend, I'm going to show you. So we're going to have more videos after this, you understand, because it's an extensive teaching, because you're going to go way deep in. So right now, see, the normal regular understanding of the market structure on an uptrend is once price does this, for example. So this is your higher high, this is your higher low, this is your higher high, this is your higher low, your higher high, higher low, right? Higher high, higher low. So the normal thing to do is once price breaks this higher high, right? You wait for retest on this level to buy. Some other concept too, which I'll still teach in my mentorship, is most times it's not going to buy from here. Sometimes it could come back inside here. Are you getting me? And it's going to buy. They will talk about where to place entries and stop losses. So this is how you look to take entries when you're on an uptrend. You understand? When you do uptrend, like this, you look to take your entries. All right. You don't just buy here when the market don't make higher high. No, you wait for your retracement. Sometimes you can use your Fibonacci levels, which is 100. 61.8, 50.0, 38.2, like that. Okay. So you wait for your retracement any of these levels down here. 100 is going to be here. So you take entries on that, and that is for that. So right now we take entries. We look for entries when price breaks our previous highs and makes a retest to that area of the high, or in this area of the market structure, because it is still bullish. All of these areas right now, here and here, it is still bullish until price breaks this low, this higher low. All right. If price violates this higher low, then we cannot look for a possible sell entry because now the market structure has changed from the bullish to the bearish. Let me explain that. So in an uptrend, right? Again, we move again. This is price consistently making higher highs, higher lows, higher highs, higher lows, higher lows. So you're looking for an entry, all right? Price comes down here. You look for your confirmation, whatever you buy. Sometimes the price could also come way down here. But before we even go deep, talk about these entries of buying and selling, let's understand something. So whenever we have a structure like this, so with our eyes, I'm trying not to make this look perfect. Do you understand? So with our eyes, we can understand that we're in an uptrend, right? Uptrend, yeah. So now this is a higher high, higher low, higher high, higher high, higher low, higher low, higher low. But once price does this, watch. Once price does this, it has violated this uptrend. Because now, the consistency of an uptrend, don't forget, is higher highs, higher lows. So now, this trend has been violated. Why? Because this is your higher high here, higher high, higher low, right? Higher high. Then this is your higher low. So now price has violated this higher low by closing below this. So we can no longer call this an uptrend. So the uptrend was true until this point, but was violated when this higher low was taken out. When this higher low was taken out, price, the trend of the uptrend changed. The uptrend changed to the downtrend. So right now, we're in a downtrend. So we can call this change of structure. Change of structure. One more time. We go again, one more time. We have our uptrend. Okay. High, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Right? So we'll draw this out like this. If price continues to this upside, our trend is still up. Our trend is still up. But once this happens, the trend is still up because we're in all of this area is still the bullish area. We're still bullish. All of this area is still bullish. But once this happens, this higher low has been violated. So now we are looking at a possible downtrend. We all know this, right? Now, in a downtrend, we have something like this. So you have your high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now, this is the last lower low you have. This is the last lower high. Last lower low, last lower high and the lower low. Sorry, this is your last lower high, this is your last lower low. Now, if price continues like this, we're in a downtrend. Why? Because the downtrend is a consistency of, we expect a consistency of lower highs and lower lows. Lower highs and lower lows. We must expect a consistency of lower highs, lower lows. But now, if price does this, if price does this and stops here, we are still in a downtrend because this lower high has not been taken out. Yes, this could be called your retracement. So if this is not broken, this lower high, we are still in a downtrend. So all of this buying could just be a retracement. But once this happens, you see price has violated this lower high. So we can say we have a trend change or change of trend. Why? Because this lower high has been violated. So at this point now, we are looking for buys, right? Buying opportunities. So we're going to find buying opportunities for this point because this lower high now, price has moved, broken it. When it moved from here, from this point A to this point B here, the trend was still intact until this lower high got violated. Why I'm going detail like this, when I'm trying to make this so detailed like this, so that you can understand and make perfect entries when you're trading. You can make better quality entries by understanding these little details. Because if you don't understand these details, man, the thing will show for your trades. You understand what I'm saying? So right now, we are looking at a trend violation. So this downtrend now has changed towards an uptrend.